Welcome, everyone, on how to create a wealth plan that you can control. Thank you so much for joining us today. With the COVID-19 virus running rampant and everyone in social isolation, this really is a great time of uncertainty for us all. So we're providing this webinar today, not because we're medical experts on the virus, nor are we economists and able to predict what's going to happen as a result of this virus, but we merely want to help you utilize some of this extra time that you have on your hands and take advantage of the flexibility in your schedule to engage with something that is intended to be positive and really just provide a new perspective on wealth building. So we will be spending the next hour or so discussing how to create a wealth plan that you can control. So this is an interactive presentation. So you might not, if you click on the bar, either above or below your screen, you'll see that there is a place that you can chat or ask questions. And so after the presentation, I will definitely be checking and can answer any questions that anyone here might have. So we have some new people on here today, which is great. For those of you who do not know us, we are Monica and Vaughn Jazik, and we're just going to give a quick introduction about ourselves. We are wealth builders. So I'm having problems with the presentation here. Switching slides here. We are wealth builders and owners of real property investments where we help real people build wealth through real estate and alternative investment products. So we've helped over 1,000 investors across Canada build wealth and create freedom in their lives by creating a membership with personalized and group coaching services and hosting monthly educational events featuring top industry experts that we work with and that are all part of the Real Property Investments team. We also are the authors of the book Real Estate Mistakes, where we share our experiences as active real estate investors with the aim of helping new investors avoid commonplace mistakes. We're also parents of 4 wonderful yet expensive children. And we do live in Markham, Ontario, where we spend most of our majority of our time parenting, helping others create freedom in their lives, as well as living our best life, traveling and participating in fun hobbies such as skiing, tennis, and CrossFit. But our biggest accomplishment really has been creating what we call time, money, freedom in our lives. And this is really what we aim to help others achieve. And we would not have achieved this if it was not for investing in real estate. So all too often, headlines and seminars are focused on these types of topics, which are, quitting your day job and how to become a full-time real estate investor. And, as fine as dandy as this is and a pipe dream, it can be achieved, at Real Property Investments, our message is quite different. Our focus really is how people can get their money working for them rather than them working for their money. Not so they can just pack up and leave work, but so they can go to work every day just feeling empowered and, willing to be there and knowing that they choose to be there, not because they have to be there. And to me, I think that's a very, very powerful feeling to have, to choose to go to work every day, not because, you have to. At our presentations, anyone who's been to an RP event, we often pull up this amazing Warren Buffett slide that says, if you don't find a way to make money while you sleep, you're going to work until you die. And we always follow this slide with a question, and I really want everyone here on this webinar today to ask themselves this question, which really is, how much income are you generating if you stopped working today? And the reason we ask people this question is because this really is a true indication of, a person's real wealth. Now, we also discuss these scary statistics about Canadian wealth. And these are very real statistics, and they're very real. And I always present these because I really want people to be, enlightened by them. That 50% of Canadians are living paycheck to paycheck. 31% say they already do not make enough to meet all their financial obligations, basically meaning they don't make enough money. 32% of Canadians between 45 and 64 are nearing retirement without any savings, and 25% of retired Canadians are still in debt with mortgages and consumer debt. So you can imagine, take these statistics and relate it to what has happened in the markets, a couple of weeks ago. What is happening with this coronavirus? These statistics have jumped off the slideshow that we're always referring to, and really kind of came to real life of how people are being affected by this. And even in normal times, when the market was fine, the economy was strong, it's still very scary that this exists in Canadian society. This is a reality about our society. And it's scary because these are not non-productive people. These are hardworking Canadians who are doing exactly what they were taught to do. Go to school, study hard, get a good job, save for retirement. And the problem is that with today's cost of living, just people cannot afford to save. It's very, very difficult to save 10% or 20% when you're not even making enough to make ends meet. And when they do manage to save this, they are not growing it the right way. So what most people are doing, are they're going to work, they are trading their time for money, they're getting a paycheck, then they're paying their bills, leaving them with no money until they go back to work, and then the cycle kind of continues. And this is, what we often refer to as the rat race. This is people trading their time for money, and the only way that they can make money is them working for their money, not having their money work for them. Now, conventional savings is saying, we should set 10 to 20% aside for saving, and, so people can afford to do things which are your rights, such as retiring, so you don't have to work forever, being able to help your kids go to school, or helping provide them with a down payment, or being a homeowner yourself. And people do manage to squeak by and, save their money. But when they do, they tend to invest in these types of options here. Sorry, I have to change the slide. Changes options here, sort of that they kind of achieved last week. Give me 1 second here. My presentation is stuck. Yeah, so when most Canadians do move forward and invest, they are investing in mutual funds and the stock market. And everyone knows, what happened. This was historical lows. This has never happened before supposedly because of this coronavirus. And even in the best of times, when people are investing in these types of products, they are low growth products where they do have little or no control. So if you average out these returns of these investments over a period of 5 years, you're going to get 5%, which is not awful until you minus the management expense ratios, which are at 2%. And then another 1.7% for inflation. So that leaves you with about 1.3% growth. So basically, people are not even keeping up with inflation, never mind building long-term wealth for their savings goals. So this slide here happened recently in the markets. It is a historical drop. And a lot of people are suffering because of this. Who knows what's going to happen? People are trying to figure out what to do. We felt the same implications. I know it wasn't as bad, but in 2008, when we were investing the conventional way, we experienced this as well. We were growing our money the traditional way. We watched all our retirement funds, our kids' RESPs, and all the savings that we were advised to do just poof, disappear. And this was just the first reminder that we kind of really had to start doing things differently. We wanted to start to learn, have more control, and to invest different. Now, I always show this book. It's my absolute favorite book. And Rich Dad, Poor Dad, I don't even remember how it came across, but we stumbled across this book, and we really learned some new and innovative concepts that challenged this conventional wealth building. So, although this book will not teach you how to invest in real estate, it really teaches you why real estate is the #1 wealth builder. And that's really kind of what I want to sort of touch on this tutorial or this webinar today. So, after we read that book, we really knew for us it was time to invest different. We needed to start building wealth and growing our money differently, not the same way that we've been advised to do, the conventional way, because we didn't want these average returns. We didn't want to be a statistic. So on this webinar, we're really going to delve into these 3 ways that you could build wealth by investing different, so you can create an investment plan that you actually can control and not be victim of what recently has happened in the markets today. So our first tip obviously here is to buy real estate. We love real estate. And why do we love real estate so much? Well, we love real estate for the following reasons here. First, real estate is the only type of investment that you can actually leverage. So if you want to buy $100,000 of the stocks, you just buy $100,000. But in real estate, I mean, the banks will actually loan you, because it's such a safe investment, they will loan you the majority of the funds to acquire property. So for simplicity's sake, if you want to buy a $100,000 property, you only need to come up with $20,000. They will give you 80% of that. So it really is the only investment product that you can leverage. It is tangible, meaning you can touch it. It actually exists. It's not a blip on the computer screen like the other stocks and mutual funds people invest in. People will always need places to live. It goes back to Maslow's hierarchy of needs, shelter. People need homes. And so you, as the landlord, always have clients, which are your clients are your tenants. There's always a need for your product. And I saved the last point because it's the most important point and the one that we really want to touch on today, which is control. Real estate, you can actually control your investment. So people who actually have real estate as an asset class that they control, it's not experiencing the same things that the stock market dropped a couple days ago. So now real estate can be a risky investment too. I'm not saying it's easy. I'm not saying it's the best thing to do, but at Real Property Investments, what we really do here is we create real property investment real estate models. So what we do is we invest in high growth areas all across Ontario, and we take all that guesswork out of investing, and we really show you how to control your real estate investment. So ways that you can control your investment is you could choose where you want to invest. You could choose what kind of property that you want to invest in. How much are you going to pay for this property? You can control your offer price and your price. You can control how much to rent it out for. You can control actually what your returns are going to be, and we're going to go through that in a little bit too. And you can control who you have monitoring your investments and really create a more safety team. We provide our investors and members with an entire team of real estate agents, mortgage agents, home inspectors, property managers, and all the people that really kind of give you the support that you need to make real estate a turnkey investment, and to save you time, money, and obviously most of all, mistakes. Because if you don't know what you're doing, you don't have the support, mistakes are inevitable. And not having a support network really can make real estate investment a bit risky. So we're just going to touch on the returns. We saw earlier the returns that people can expect from mutual funds and stocks, which is 5% minus all those fees. Let's review some returns that can be expected by a general buy, rent, hold model in real estate. So if we were to buy a property for $375,000, which does exist in Ontario, believe it or not, our models range from more of the, just below 200 all the way up to $600,000. But this example, we're going to use a $375,000 example. And all we're going to do is hold this property for 5 years. We're going to have it appreciate for 5% appreciation because that's the historical norms. After 5 years, your property is going to be worth just shy of $479,000. That's just on the 5% appreciation. If you were just to sell it just on that, you get almost $104,000, which is pretty groovy. Now, obviously, we're not boarding up our properties or renting them out. So say if you had conservative rents of $1,400 on the main floor, $1,000 in the basement as our model, like we indicated before, does not work on single family properties in this price range. We had to create a legal duplex conversion model. So you're making $2,400 a month rent, which is an extra 20 grand in cash flow over 5 years. And if you simply just add up your cash flow and your profit, your total ROI is just shy of $125,000. This is on conservative returns. You are making 30% return on investment. Now, this is a standard return for all of our investment models, which really, really is very exciting, a lot more exciting, in my opinion, than just trying to invest in stocks and mutual funds. By using a general financial planner, I know that maybe there's some Warren Buffett gurus listening, and that's amazing that you have the time and the knowledge base to strategically invest in stocks and make that part of your wealth building criteria. When I allude to people who are investing in stocks and mutual funds, I'm talking about the people like we used to be that had no experience and basically set it and forget it and relied on conventional wealth building. That is what we are adhering to today as our example. So how COVID-19 can affect the real estate market. Okay, I am not saying real estate's not immune to the COVID-19 or challenges from this virus and changes in the market, as well as possibilities of a global recession. I just want to offer some perspective and real life examples that I personally have been experiencing, as well as commonly asked questions during this time, and to show how real estate investors do have a lot more control over their investment if they implement some common measures. So the first question that I have been asked, or I see be asked online or wherever, is will the market drop? So I don't know. I don't have a crystal ball. And anyone who tells you that they do know, they are lying, because no one knows. This is like a day-by-day crisis here. So I can tell you this, though. So far, the real estate market has not dropped, although it is a great time to be putting offers because people may be selling in a panic to get out of the market. Multiple offers are still happening. I can tell you this firsthand because I put in 6 offers over the last 5 days and lost every single one of them. So even though people are not actively as viewing people, this is a great time to be adding to your portfolio, as crazy as it sounds. I mean, obviously use social distancing, take that seriously and put it in play. But if you think that people aren't taking advantage of this tumultuous time to invest in real estate, think again. There are multiple offer situations still in play. So maybe the market won't drop. Maybe there will be a spring market, but I don't know. So what are things that people can do to protect themselves against a price drop for existing investors and newly acquired properties? So let's pretend maybe you have a couple properties or you're going to acquire property during this tumultuous time. Here's some tips that you can protect yourself and really keep that control in your investment. One is do not overbid on the properties. I mean, at Real Property Investments, our experts show our people how to put in strong offers, but we always want to be making money when we buy, not when we sell. So we really need to know our numbers. This is what we have all of our spreadsheets and all of our tutorials for our online member site talking about this. Know your numbers, know how to put in strong offers, real offers, not these silly lowball offers that are ridiculous. And not overpaying for your properties like all the imitators out there, how to put in a real strong offer. So you have built-in equity in your property, and this really helps you shoulder price fluctuations. So let's pretend you're able to get that $100,000 home and you put in, say you get it for $90,000 rather than the full $100,000, you have that $10,000. And then if any thing drops substantially, you have that money to shoulder these price fluctuations. Also, we always have our mortgage specialists. So the first people to tell you, always put 20% down. So once again, you have this built-in equity. Do not constantly try to leverage your properties. All these people are just, refinancing and reinvesting. Yeah, it's a great time to borrow. It's a great time to use your assets. You might need to do that a couple times to get started, but let's do it responsibly. We're doing this to enhance our lives and build wealth, not to put ourselves at risk of having underwater mortgages. You always want to have room for market fluctuations to prevent you from going underwater. So not leveraging your properties too much is another great tip, as well as putting the right amount down and trying to get these strong offers in as well. Second question, will our tenants be able to pay rent? I know that there's been a lot of changes. Ford's announced all these changes. People don't have to be evicted. They don't have to leave. They have the option of paying rent. I know owners have the option of paying their mortgages, yada, yada, yada. A lot of things going on. So once again, my answer to your question is who knows? Tenants are tenants. They're all going to be different. I mean, we have had some tenants pay early already. These tenants have been sending in their rent saying, because of COVID-19. Other tenants that you have are going to take advantage of any situation. So we can only imagine what the first of the month is going to be like. I mean, investors do have ways to control situations like this. So some ways that you can get control once again is to pick your tenants. Choose tenants that have more stability and are less likely to be impacted by recessions. So back in the day when we started out investing in real estate, we used to pick out working class tenants. And that was just our model. It was part of our model. It was our tenant model. But then as time went on and the Ontario Tenant Board started favoring tenants too much, we had a lot of problems with tenants as well, all the rights that they had. So we really kind of regrouped and revamped our model. And we kind of redid our model more of a middle class tenant, people who are more on salaries. They're in positions that, you know, if you get laid off, they have a package. They're a lot less volatile than people who are living month to month and so dependent on their jobs. We also like student rental properties. Students do not experience recessions as well. So pick your tenant is a great way to control your investment. On the other end of the coin, I mean, some people out there could do the total opposite end of the spectrum. You guys could pick tenants who are on pensions, lower income people who are dependent on pensions. These people are not going to be affected by changes in the job market because they're not working. If they're on ODSP, if they're on assistance, these recessions are not going to affect them. So whatever kind of model you're comfortable with, not only are we going to create a model in real estate in regards to investments, you also want to create a model for your tenants. So you ask yourself, what kind of tenants do I want to attract? And what are the pros and cons of having these types of tenants? Another way people can protect themselves from their tenants not being able to pay rent this month really is when we educate our investors about their numbers with our online analyzers and help them build out their models. We really encourage them to have a contingency fund. And you need to have a contingency fund every single month. And those numbers were actually in that original spreadsheet I've shown. I don't know if you noticed. But this is for vacancy. This is for maintenance. This is for repairs. This is for property management. And also a staying power fund. You should have 3 to 6 months of expenses built in each one of your properties in the event that your tenants stop paying rent. This is your exit strategy. This is your emergency fund here for you to keep controlling your investment and not be a victim for these fluctuating circumstances. And lastly, question number 3 is, are we entering a global recession? So once again, who knows? Regardless, investors can prepare by anticipating conservative returns, which show tremendous growth. If you go back to that spreadsheet I showed you, we do all of our returns on 5% appreciation over long-term 5-year holds. This allows people to fluctuate, ride out any fluctuations that might have to happen in the market. Now, some of these years of these people's investment properties and returns, they've been experiencing returns over 20%. Look at a few years ago when it was sky high. But we don't care. We don't pay attention to these things, to these ups and downs. We only base our returns on conservative numbers that are sustainable. Because once again, if you go back to this 5% return, it accounts not only for the highs in the market, but also for the lows in the market. So we're always, always prepared to hold our properties. Now, a lot of people have lost their RSPs, or even people who are living off their RIFs are experiencing enormous losses here. I mean, this is, why every investor really should have at least 1 to 2 investment properties in their wealth plan, because this can be a huge game changer in your retirement plan. So this is not real property investments. We do not want you to have 100 properties, and who cares? You do not have to be a full-time investor. We are wealth builders. We want you to build wealth. We don't want you to complicate your lives by having multiple properties, because you can create immense wealth with just 1 or 2 properties. So let's pretend someone has 1 or 2 investment properties in their wealth plan, which you should, and we'll definitely get you on track together. If you were to buy that same house in that example that we discussed for $375,000 at the age of 40, and all you do is pay off your mortgage, for 25 years, by the time you're 65, you're going to have a paid off asset, okay? Your house value increasing at 5% over 25 years, your $375,000 property is now going to be worth $1.27 million. So if you bought 2 of these, you would have $2.5 million. How would you guys like $2.5 million in your retirement fund just by investing in a very low priced asset years ago? And you have so many options here. It's not subject to the market fluctuations. You can keep the cash flow to live off of, or you can sell it and you can live it off the cash. And don't forget your personal residence. With these 3 properties in retirement, you are going to be a multi-millionaire. You can have that retirement of your dreams and not worry about losing it all with these types of events that we're experiencing today. And the same with creating the intergenerational wealth. I know we like to deal with people who are really, we're in it to help people and to help you. It's not about your kids and your family or your charities. What are we really doing this for? And, to begin with. So people who really kind of have these sort of assets in their portfolio, they can create this generational wealth. They can pass these homes down to future generations. You can leave it in your will and you can have people split proceeds, or you can strategically finance and really help some of these other generations become homeowners, and so they can add real estate to their investments as well and get ahead and create an amazing portfolio like you did. And all this can be achieved with even just 1 property. Now, the second way to build wealth that we help people at Real Property Investments is really to take control of your savings and your registered funds. And one common myth is people think I have to grow my funds through bank products and traditional bank products. And this really is not true. Many people do not know that you can self-direct your registered funds. You do not need to rely on a financial planner to grow your money for you. And you can grow your money, your like TFSA, your cash, your RSP, your LIRA, your RESPs, and all sorts of different opportunities. Private lending, private mortgage products, arm's length mortgages. I mean, you could be the one to vet the investment opportunities and actually be involved in growing your portfolio, hands-free, but you still have that safety and security of working with licensed professionals to guide you along the way. Now, these are the passive investments that are going to grow your long-term savings. They can also put cash in your pocket every month, replacing your job income and giving you freedom in your life. So imagine for those people now who they cannot go to work, maybe they're people, but they have invested their money and create a residual income through these income streams. They're like, wow, I can't go to work, and get my job income at this time, but at least I know I have some income coming in from these other investment products. And these are investments that you can control. Now, I was recently heard a fund manager at these private market events, because we have all our money in these kinds of private market products and hands-free investment products. We have a lot in active as well as passive real estate. So we haven't experienced any blip in any of our long-term savings plans, as we do not invest in these conventional products. But we were recently at this event because I'm consistently maintaining my portfolio and adding to it and monitoring it and learning about new options. And the fund manager at the event said a really great question. He said before any investment he participates in, he asks himself, what would this business look like in a recession? Now, this is an excellent question. Like for investors to ask yourself, when you're embedding investment products, what is the worst thing that can happen and how can we prepare? And when you have the opportunity to understand how these investments work and ask the directors of these opportunities these questions, I mean, your level of control is greatly amplified in comparison to handing your money over to the banks blindly and just letting them grow it for you. Now, the third way that you could build your wealth and the wealth is to invest in a real education. There are so many different educations and real estate experts and blah, 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 meetup groups. And who do you listen to? Where do you go? And, you know, we are real at Real Property Investments. We've committed to helping people build wealth in what we call the real way. And we've done this for the last 10 years. And we've done everything we've told you in this presentation. We've self-directed our registered funds. We've passively invested our hard-earned cash. We've invested in real estate the exact way we told you how to do it. And it has allowed us to get this time, money, freedom in our lives, which is amazing. I mean, I've been a stay-at-home mom for over 15 years. We were able to fund that university education for all 4 of our kids, even after losing all that money in 2008. So we were able to recreate our pathetic retirement plan before, and we were investing the conventional way, and we were able to totally revamp that in different self-directed products and ensuring our security as seniors. Vaughn was able to leave his job at the age of 40 after also, once again, recreating the income, so we were not dependent on his 6-figure income. We figured out how to get that income from our investments, creating a legacy for our kids, and once again, helping over 1,000 Canadians achieve these types of freedom in their lives. And we do this by helping people get their freedom goals and learn how to invest, these different ways the same way that we have, just telling you guys the real way to do this. And we do this at lower cost. We do not believe in $100,000 education things like we did, or forcing people to be part of groups, or forcing people to buy $50,000 mentorships. It's really not necessary. Investing is pretty easy in the sense that if you have that support network, just to give you that little 2mm change, like Tony Robbins says, that really all that is is necessary to really kind of get you started and show you how to kind of get started in building this wealth. We have the personalized coaching, meaning we're one of the few programs out there that really kind of aren't going to get you in a hotel room and teach you a blanket way how to build wealth. We want to make sure you create your own action plan. You're doing this for your reasons, and you create a portfolio that's beneficial to yourself while giving you the ongoing support and the mentorship, because that's what's really needed. You can go to a 3-day course and learn all these great tips and tricks, but where's your coach when you're in the field actually implementing? So we want to create that environment where people can consistently go back and they can get that information and the support they need and get real information. And we give you that real information from our own experts. So anything that we invest in, we share it with you. Anyone that we use in our professional team, we share that with you. We're not pulling people off the streets or the next popular speaker just to fill content or fill stages. Our events and information are all run by people that we have personally benefited from. So we have now, which is exciting, we have monthly networking events in 5 different chapters in our areas across Ontario. And because of the COVID-19, unfortunately, we had 2 events in March, one in our GTA group and our Burlington group, and now we've had to cancel our last 3 events. But we do have some excellent events coming up, and we're going to do them all online so our people can continue to build wealth. And we'd encourage you to sign up for these upcoming webinars, or even schedule a free 30-minute call if you're interested in learning more about our membership options and how we can help you build wealth. And lastly, don't forget to follow us. I mean, if you want to learn more, follow us on Instagram, Facebook, and YouTube, and connect to us and see what we're up to and when we're having events or other workshops that we're hosting, because we have tons of information on all these portals, because we're genuinely committed to helping you start building wealth, not 25 years from now, but today. So now I'm going to open